Good morning, everybody. Thank you for joining the Small Business Boot Camp for this Tuesday, August 29th. Can't believe how fast this year's going by. We're wrapping up August. I'm excited to be here with you today. I'm Robert Theobald, Small Business Ombudsman and Vice President of Small Business Services. So while I'm going through my introductory slides here that we normally do, please post up in the chat where you're tuning in from. We love to see the different parts of Arizona and different parts of the country, and sometimes internationally, our attendees and where they're tuned in from. So it's always fun to see that. So please post that up in the chat. And we'll see, we got some Mesa, Gilbert, Glendale, Chandler, Tucson, Lake Pleasant, Rochester, New York. All right, Scott. Tempe, Prescott, North Phoenix, Tucson, Peoria, Sahuarita, Maricopa, Thatcher, Chandler, Globe, Pierce. All right, Pierce, Prescott, Eastern Arizona College, Peoria, Scottsdale. So excellent. We got people from all over joining us. We're glad to have you with us. So thank you. As we like to do, we like to start by thanking all of our community partners. We cannot do these boot camp sessions without them, their time, their effort, and their expertise. We have well over 200 presenters that have been on the boot camp, representing more than 120 companies, and they're all experts in their fields, and we could not do these without them. So those that are new and not familiar with the Small Business Boot Camp, this is your first time, you've only been a couple times. Small Business Boot Camp is a webinar series that we host every Tuesday morning to help small businesses prepare, plan, and grow. We've been doing the webinars for over 3 years, and it started in the pandemic and continues to be very successful, and we love doing it and bringing this content to all small businesses throughout the state. Additionally, besides the Tuesday morning 9 a.m. webinars, we also do some workshops, both virtually and in person, and we also have our content library. So the content library is where we house all of our recorded webinars, and we attempt to record every webinar. Occasionally we get some that we can't due to licensing agreements with the presenters and their host organizations or other things, but we have well over 250 recorded webinars from our experts to share with you on the content library. There's no cost to access it. It is on the Bootcamp webpage, and I believe Faith will be posting that link in the chat, so you can go to it. If you scroll down to the bottom of the Bootcamp webpage, you'll see the content library, and then you'll see that there's 7 different categories you can sort by to find the different topics you may be looking for. If there's something you're looking for and you can't find it, you can always reach out to us. You probably got an email from me this morning reminding you of the boot camp, so you can respond to that and ask me where to find something. I'm glad to help guide you to it. Additionally, the Arizona Commerce Authority has a number of different programs to help support small business owners. We have our Career Readiness Credential program, the Arizona Innovation Challenge, which is a business plan competition that is currently, application period is currently open for another 2 days. Our Arizona MEP, our Manufacturing Extension Partnership for small and medium-sized manufacturers. The Arizona State Trade Expansion Program, AZ STEP, for businesses looking to export your goods and services. Arizona at Work, for employment things that you can do to find employees. And our Small Business Services, which I oversee, which includes all of our programming and other resources. One of those resources is the Small Business Checklist. So if you're just starting your business or looking to start a business or looking to expand your business into other industries or other areas of the state, the Small Business Checklist can help you identify the commonly requested licensing, registration, and compliance needs at the local, state, and federal levels for your industry, your business, and other things. So it's an amazing resource. The checklist is very in-depth with lots of links and information, but for simpler questions, we do have on that page a virtual assistant, Sally, Sally stands for state and local licensing information. And you can use Sally to get some quick information. But if Sally isn't able to answer your question, dive into the checklist and you will be able to find the information and lots of it. So we also like to share some quick updates on things going on, related to small business. So first up, we have the State 48 Foundation is doing their Entrepreneur Speaker Series in the month of September. There's 4 different events they have starting September 6th. They've got a great lineup of speakers in the speaker series. I went to one last year. I'll be at the 4th one with the table set up as well. But there's a great lineup. I was really impressed with the lineup that they pulled together for each of the 4 sessions. Also, the Challenge Her Phoenix, presented by the SBA, is currently open. We're gonna post links for these in the chat, so you don't have to scramble right down. You'll be able to click on those links and open them up on your side browser. So the Challenge Her Phoenix, presented by the SBA, is currently open to register. And then also the 2023 ADOT, DBE, and Small Business Conference is going to take place down in Tucson on October 3rd and 4th. There's no cost to be part of this conference. And it has a lot of information on doing business and contracts with ADOT, but also a lot of other information just to support small businesses in their growth. So please, feel free to check that out. I will be part of the panel on October 4th in the morning. So we're looking forward to that. And then with that, we have our upcoming sessions. So next week, we are taking a break for the Labor Day holiday. A lot of people have 3-day weekends and come back to work on Tuesday morning. And we know when you come back after some days off, you got a lot going on. So we are not going to host a webinar on next Tuesday, but then we pick up on September 12th again, 9 a.m. With a great session on employees versus contractors. And then following that up with navigating business loans with some insight from underwriters. And we're going to have Danny Nee from CIC with us to talk about that. So with that, we're going to jump into today's session. We have Kevin Connors. He's the Center Director of the Central Arizona College Small Business Development Center. But Kevin was also a very successful small business owner before we moved to Arizona. And the presentation he's doing today, I've been part of a number of times, and it's a really great presentation. So that's why I wanted to come on the boot camp and share it with everybody. And so I'm going to stop sharing my screen. And once Kevin gets his screen up, we're going to share a poll for everybody to answer, which will be helpful. So Kevin, I'm going to turn it over to you. And once you get your screen up, we'll have Faith post up that poll. If you have questions for Kevin during his presentation, please post them in the Q&A that you'll find at the bottom of your screen. We like to use the Q&A so the questions don't get lost in the chat. So on your screen is that poll so we can see what the results are. And I'll tell you, I love the honesty. We got a couple of people that said never or once in a while, thank you, because this webinar is definitely going to be able to help you out with that. So awesome feedback on this poll. And
monthly, mostly once in a while. Monthly looks to be number 1 there, Robert.
Yeah, we've got monthly's number 1, once in a while is number 2, and we got a number of people doing weekly. And I appreciate the 7 people that said never, because we hope that you can get some benefit out of this session and change that never to at least monthly. So Kevin, it's all yours.
Very good. Thank you, Robert. And thanks to everyone who's joining us this morning. I see one of my colleagues from Eastern Arizona College is here. Hello, Eric. I also, Robert, you mentioned someone's calling in, or at least viewing from Rochester, New York. I'm from Buffalo. Hello, Rochester. All right. Anyways, so this morning's discussion is going to be on how to keep more of what you make. It's all about the P&L and how to run your business well. This is, oh, we're not clicking forward. There we are. This is part of a Realize Your Dream series that's been created by us at the Central Arizona College Small Business Development Center. Let me rearrange a couple of things here. So we've been putting together these kinds of programs. My name is, as Robert mentioned, Kevin Counters. I'm the Central Arizona College Small Business Development Center Center Director. I had 15 years in the corporate world, publishing. Mostly, I rose to a mid-level director of marketing at a large publishing company. And then I said goodbye to the corporate world and started my own photography studio in North County, San Diego. I had a wonderful run. I had some success as a photographer. The first 10 years were the greatest of my life, literally. The next 5 years after that first 10 was, oh my goodness, how do I pay for my mortgage every month? So I know the wonderful parts of owning a business, and I know the very challenging parts of owning a business as well. But that gives you a sense of my background. All right, what are we going to talk about today? We'll start with the learning objective. Then I'll move into the basics of the P&L. We'll dive in a little bit deeper, line by line. And then most importantly, we'll get to how you use the P&L to manage your business. I will mention a little bit about what the Central Arizona College Small Business Development Center does. And then if there are any final questions or comments. Let me also say that this is an abridged version of this presentation. We're actually lifting an entire segment out of this presentation. So if you ever have a chance to come to one of our full-blown presentations, please do so. There's some pieces of the puzzle that would be wonderful for you to know. But that's what we're going to handle today. So let's start with the objective. I look at running a business as kind of circumventing or circumnavigating a maze, if you will. You're always trying to find a better way to get through things. But it is rather like a maze. For me, the P&L was a way for me to better navigate through that maze. So today's learning objective is to hopefully understand how the P&L works, but most importantly, how it works for you so that you can manage your business better. That's really what this is all about. Let's start with some caveats. Excuse me. Owning a business is more like Sparta than it is Athens. Let me just say it that way. This presentation is a high-level, low-detail look at an actual P&L, my P&L. So caveat emptor, buyer beware here, right? Everything I say, you should always triangulate. In my humble opinion, you've got to be using some accounting software to run your business. If you're running your business from Excel, boy, that's a tough row to hoe. You can make your life a lot easier if you use accounting software, whichever that might be. Also, I believe that you should be working with at least a bookkeeper level of accounting professional. In my world, the way I set up my accounting was I learned enough day-to-day QuickBooks, that was my application. I learned enough to be able to do the day-to-day, and then I brought in a bookkeeper every quarter. She needed about 3 hours to make sure everything was clean. So that, and she charged $50 an hour. So that was $600 a year I knew to make sure that my data was good. And I met with my CPA twice a year. That for me was the best way to manage costs, but also not compromising on clean data, if you will. Here's the fine print. The Central Arizona College SBDC, or any SBDC for that matter, we do have the entire state network. We cannot, by our charter, provide clients with accounting and legal advice. So we ask that you go to professionals for that help. That said, there's always some wink, wink, nudge, nudge on this kind of thing, and that's what we'll be talking about today. All right, so here's the issue I find working with so many businesses, is that the business owner typically knows their business really well. Roofers know how to do the roof. Coffee, they know how to make the best coffee. The problem is that many business owners don't have much experience running a business. So the business of the business, if you will, is what's holding them back a little bit, as a matter of fact. But certainly folks know their world very well. It's the business of the business that can be troublesome or challenging. So when it comes to a P&L, and here's a P&L on the right-hand side, we're going to be looking at this. The P&L helps you to run your business better because you have real-time data. As long as you're keeping up with things, you'll have the latest data from which to make better decisions. And when you make better decisions, by the way, you make fewer mistakes typically. You'll also be able to make faster adjustments on the fly. And ultimately, I'm a probabilities guy, you'll be able to increase the probability of success, because as we know, there's always a chance of failure. And let's increase the probability of success by using our P&L and using it well. All right. So if there's one thing to take away from today, it's this old mantra: you can only manage what you measure. And it is kind of a mantra, or mantra if you're from England. I really, this is one of those you can only manage what you measure, you can only manage what you measure kind of things. So I'll be pounding this throughout this this presentation. So P&L, what the heck is this thing? Well, here's one on the right, and in fact, this is my actual profit and loss statement, excuse me. My actual P&L from 2012. And let me say that showing people your profit and loss statement is a bit like opening up your diary. It's a very personal thing, and normally the only people who would see these things are my accountant, my CPA, my bookkeeper, or my lawyer. So it feels almost weird to show the P&L, but there is a story here to tell. So that's why I'm using my actual P&L for this. So a profit and loss statement is literally a snapshot of how well you're doing. At any moment, as long as your data is up to date, you can see the health of your business with a mouse click, basically. From my humble opinion, it is the most important data with which to manage your business. I am a self-proclaimed P&L junkie. I looked at my P&L every day. It drove my studio manager crazy, but she also learned the P&L from that as well. So it is, from my standpoint, the most important data you'll use to run the business. It is one of three main financial statements, especially if you are in need of a loan, a business loan. The other two are the balance sheet and some kind of cash flow statement. So the P&L is one of these three main financial statements. Lastly, it's also known as the income statement. Profit and loss is synonymous with an income statement, so just know that. All right. So in the P&L game, there are three major lines. Question is, what's the most famous of the line? I'm sure that most of you are out there saying the bottom line, isn't it? Yeah, it's the most famous line, if you want to look at it that way, is the bottom line for the profit and loss statement. And the bottom line is simply equal to profit. We're going to be using some other terms now and then, but let's start with the idea that, all right, the bottom line is what I keep. Well, if there's a bottom line, there's got to be a top line. And the top line is simply equal to your sales. By the way, other softwares will use income. QuickBooks Online certainly does that. It may also be referred to as revenue. But the top line, for the time being, I'm going to refer to that as your sales. And of course, there's a middle line. And that encompasses all of the expenses for the business. So really, when you boil a P&L down, an income statement down, you boil it down to these three main things: the bottom line, a top line, and a middle line. So we're gonna expand on this, of course, but at its most basic, that's what it is. So let's continue with the basics here. Again, here's my P&L on the right-hand side. And sure enough, my bottom line is actually at the bottom. If you notice there, net ordinary income, that's how QuickBooks refers to it. My bottom line was just over 50 grand. So after I paid myself, the business had over 50 grand sitting there after our operations for 2012. So the bottom line is literally at the bottom of the P&L. The top line isn't quite at the top because I actually have some categories that I wanted to see there, categories of income. But it is nearly at the top, and you'll note there that my sales for 2012 was just under $218,000. My middle line, which there it is, 150,800 and some change. My middle line, again, all of my expenses really encompasses all of those lines there underneath the expense listing. So there's the top line of sales, the middle line of expenses, and the bottom line of profit, what we're keeping. I see there's a question in the Q&A. Do I need to direct that people manage business by keeping on their bank? Okay, fair enough. Which is more important? Do you look at a P&L to make corrections while still looking at money at bank accounts? Can we deal with that at the end there? I think that'll be good at the end. I'm going to go ahead and minimize that for a moment. All right.
We'll save it in there, Kevin, for the later.
Pardon me?
We'll save it in the Q&A for later.
Excellent. Thank you. All right. So let's continue through the basics. You can actually create a formula, if you will, an equation for the profit and loss statement. And it's simply the bottom line is equal to the top line minus the middle line. So if we use these terms that we've established, profit is equal to your sales minus expenses. It's as simple as that. That really, in a nutshell, is your profit and loss statement or income statement. We're going to get more in depth here, of course, but the bottom line is that's as simple as it really gets. So let's start refining these lines a bit. We refer to the top line as your sales, also known as revenue or income. But what about those businesses that have returns? You may sell stuff and you may have to take some stuff back. So the way you deal with that is simply by subtracting your returns from your sales, and this will give us, here's introducing a new term, net sales. So your sales minus your returns equals your net sales. That, in essence, is your top line. We'll refine this just a bit and call it net sales from now on. So if we go back to the P&L, we notice, wait a minute, below the top line of 217 and some change is this whole other section called cost of goods sold, or COGS. So cost of goods sold are those things like raw materials, direct labor, any commissions that you might pay on sales, shipping and packaging, and even, say, for a site that's solely dedicated to production, the utilities for that site. In other words, it's all the costs associated with the production of the goods you sell. All right. So all of those things go into cost of goods sold, or COGS. If we continue down this road, I'm going to go and and expand the COGS lines from the P&L so we can see it easier. So you can see here that my total cost of goods for 2012 was a little over 16 grand, with the bulk of my cost of goods sold in albums. But wait a minute, you're a photographer. Shouldn't photographic paper be higher? Well, that's part of the story we'll talk about a little later. But COGS, most importantly, are what are called variable costs. In other words, they're going to change with changes in sales. In other words, the more you sell, the more stuff you have to produce, therefore, the greater the cost of goods sold. Hopefully, that's fairly straightforward for everyone. So everything that I produced for my clients cost me a little over 16 grand to produce those things. What's important to note is that if you can decrease your cost of goods sold, that money, that amount goes straight to the bottom line. What that technically means, it goes straight into your pocket. So it's always crucial to manage your cost of goods sold. It should be a constant goal of any business if you have things that you sell, products that you sell. Please note that if you are a service-focused company, you rarely, if any, have any COGS at all. So service-focused companies really typically do not have any cost of goods sold because they're selling services, not products. All right. Let's continue refining the lines here. So if we take another look at the profit and loss statement, there's also this line there called gross profit. Well, what the heck is that? Well, let's expand that a little bit so we can see it a little bit better. There it shows that my gross profit in 2012 was a little over 201,000. Well, basically what we're doing there to get to the gross profit is we're taking the net sales of 217 and almost 218 grand. We subtract the cost of goods sold, what it costs us to produce the stuff that we're selling, and that equals our gross profit of 201,000. So it's 217 minus 16 gives you 201 in this equation, leaving out all the spare dollars. So again, because COGS are variable costs, the gross profit is taking into account your variable costs in the business. Most importantly, what gross profit is measuring is how efficiently you are producing your stuff. How well are you managing the cost of raw materials, your labor costs, everything that goes into producing those things. It measures the efficiency of the production process. That's the takeaway for gross profit. Also note that, again, if you can lower your cost of goods sold, that's going to mean a higher gross profit, and that money goes straight to the bottom line, straight into your pocket to keep. I'll continue with refining the lines. We've talked about the middle line as being expenses. So the difference here is that these are expenses that are not tied to the direct production of goods. Sometimes these things are called OpEx or operating expenses. These are fixed and partially fixed costs. When I mean when I mean fixed costs, what I'm talking about are those things that don't change over 12 months, don't change over your year. So things like rent and insurance and salaries, those should be fixed for a 12-month period at least. We also know those as overhead. Sometimes you'll hear it stated that way. The partially changing costs are things like marketing and advertising. I had, we'll get into this in a little bit, I had a down year in 2011. In fact, it was a major down year. So for 2012, we needed to change things. And so I actually increased the amount of advertising and marketing in the business to drive sales. So our expenses, the middle line is technically anything between the gross profit and the bottom line. Those are all our expenses. And in this expenses thing, let's explode that section of the P&L. Here you have my administrative costs of 17 grand and more. Interest on my insurance cards, yes, things were tough right then. Marketing and advertising expense. Here's my insurance costs, my rent, 42 grand for my studio. Utilities that cost me throughout the year, salaries and labor not tied to production, that's the important thing. Any accounting and legal fees, and lastly, my travel and entertainment budget. But again, remember, you can only manage what you measure. So it's important to decide what are those things that you want to account for. And I think you should always do that in tandem with your accounting professional. All right, let's get to the bottom line, which, as we said earlier, is profit. But now let's refine that a bit. We're going to call it net profit or net income. Those are interchangeable. Most importantly, that number is Ebitda, net income Ebitda. And that acronym stands for earnings before interest, taxes, depreciation, and amortization. So when we look at net profit, say that bottom line of mine from QuickBooks, that is my net profit before interest, taxes, depreciation, and amortization are accounted for. So we can come up with a bottom line equation here finally of being the top line, which of course we call net sales, minus the middle line, which again is expenses, equals your net profit Ebitda. So ultimately, that bottom equation is all that your P&L is. It's the net sales from your business, less the expenses that you paid to give you your net profit before interest, taxes, depreciation, and amortization. By the way, in the longer form of this presentation, we go into Ebitda a little bit more. Just know, though, that having an Ebitda net income number allows us, and percentage actually better stated, allows us to compare businesses within industries better, apples to apples, because every business has different loans and different interest. Because where they may reside, they have different taxes. They have different kinds of equipment and such, so their depreciation and amortization schedules will be different. Ebitda allows us to compare your business to other businesses in your industry, apples to apples. But again, we go into a bit more detail of that in the broader presentation when we do so. So again, you can only manage what you measure. This should be the one takeaway from this presentation. We're going to have a lot of time for the questions here at the end, so I'm just going to plow through here. Let's introduce a new idea here. Now we're going to be talking about how to use the P&L. And first of all, we need to talk about this thing called chart of accounts. So we'll bring up the P&L again. All of those categories there, you see everything from commercial photography and portraits and shipping and weddings. Those are all my income versus all of the expenses below that. All of those categories of income and expenses make up my chart of accounts, okay? So you actually create your chart of accounts using your accounting software. Yes, there are some organizations, national organizations, who might provide you a chart of accounts for your industry. That can be real helpful. It was for me. But typically you create your chart of accounts within your accounting software. It's actually very simple to create each account, but you have to do it one by one. Again, I always believe it's important to work with an accounting professional to decide what those categories should be, to decide the right level of detail that you want to manage. Remember, you can only manage what you measure. All right. Continuing this idea of using the P&L. When you want to come up with your income categories, you have to ask yourself, where do my sales come from? And that's important because you want to include all the major revenue streams, all those big items, for me, it was wedding photography, commercial photography, portraits, those major revenue streams, and you should add each of those categories to your chart of accounts. You want to list any major product line or service that drives revenue. So here on the right-hand side, you can see the main categories of income for me. Tracked correctly, it allows you to see where your sales come from and what lines are more profitable. That's a very helpful thing. So it also helps you to direct where you should spend more of your time. If there's more profit, let's spend more time there. All right, so let's take a look at two different lists of income. So on the left, I told QuickBooks just to give me my income total. On the right, I asked QuickBooks, as we've been looking at, to expand those income streams. Obviously, the list on the right-hand side is more informative. So it's important to decide what major sales categories are in your business, add them to the chart of accounts, and I like to have them displayed in my P&L. You can actually tell your software what level of detail you'd like to have displayed. So let's talk about driving top line. What do we mean by that? Well, driving top line is increasing sales. And if you look now, I've added a couple of columns to my profit and loss statement, just the income here. You'll note that in 2011, I had sales of 165,000, and in 2012, I increased sales over 50 grand to 217,000. The hard part of this story is to tell you that in 2010, I had just under 300,000 in sales. Yes, in 1 year, I lost 135 or 130 grand worth of sales. That was due, sadly, to the ubiquity of digital cameras, most usually the cell phone. I held out longer than most before I started to feel that pain, but the pain started to happen around 2011. I could see it coming. So at the end of 2011, I had to sit down and say to myself, what can we do to make this thing better? So of course, I used the profit and loss statement to help me make informed, real-time data decisions. So we decided to do an Amazon local deal. That was the Groupon, if you remember that way back when. It's where you dramatically reduced your prices and sold a whole bunch of these things with the intent of getting more customers into your business. So I decided that I would bite the bullet and do this. Yes, it brought us a lot of customers. Yes, it brought us 18 grand, but man, that was a lot of work. Let me tell you that. But it did bring us more. I was primarily a family photographer. It brought us a lot more families, a lot more clients. So the sales plan worked. And obviously, as I said, we increased sales over 50 grand year over year. I also decided that I better start spending some more money on marketing planning. So I spent 30% more on my marketing budget in 2012 than I did in 2011. So these were conscious decisions that we made based upon profit and loss information real time. Here's the selfish plug. By the way, the CAC, SBDC, and all of our SBDCs can help you to create these plans, by the way. All right, let's talk about managing your cost of goods sold. In other words, managing the variable costs of COGS. So it's important, obviously, first to identify what those variable costs are and add those to your chart of accounts. So you want to add your raw materials, your direct labor, if there is any, packaging and shipping. Ultimately, this is going to help you to determine which revenue streams are your most profitable. So using the P&L, that information is going to bubble up. If you go a little further into COGS, ways of reducing COGS, we don't know what's happening macroeconomically. There's a chance that there's going to be a downturn in for us macroeconomically. How bad it affects Arizona and even in particular, I'm down in Pinal County. That's unknown. We'll see how it goes. But in times of let's just say reducing sales, you're going to have to find ways to reduce your cost of goods sold, and you should be managing this all the time anyways. So one way to do that is to negotiate, or actually maybe even find new suppliers. The disruption to supply chains the past couple of years sometimes necessitates that. Monitor your inventory. You want to have enough to sell, but you don't want to have too much that's sitting around. Managing your workforce. That's a tough one, right? This is a great time to review your pricing strategy. There have been, we all know, inflationary pressures. So folks understand a little bit about prices increasing right now. If all of your inputs, if all of your cost of goods sold have increased, maybe it's time to change your pricing. And also it allows you to analyze sales trends. Down here in Pinal, we know that oftentimes, depending upon the business, summer can be a little slower. But ultimately, when you have a lower cost of goods sold, you're increasing your gross profit. And when you do that, you're also increasing your net profit, which is going to go right into your pocket. All right. Let's talk about managing the middle lines. Remember, those are expenses. So here they are exploded again from the P&L. You want to identify the expenses that you want to be able to manage, because you have to measure them. Add them to the chart of accounts with the help of your bookkeeper or other accounting professional, and make sure that you're using the appropriate level of detail, the appropriate level of granularity. Again, you can only manage what you measure, right? So managing the middle lines, ways of reducing expenses, prioritize what's essential and what's not essential in your business. Maybe it's time to negotiate a little bit better rent schedule if things are tough, or maybe you need to change around the work schedules of your employees. You know, it's not a bad thing to look at insurance every couple of years. Make sure that the deal is still a good deal as it goes. Maybe it's time to change your vendors because costs have changed. One of the great ways to save a little is to outsource. Yes, that can be a naughty word, but in a small business, it can really help, especially, for instance, in outsourcing, say, social media marketing. That can be a very helpful thing. I believe big time in automating. There are calendaring applications that can save you a lot of time. Anything that can address the repetitive tasks in the business. Maybe it's time to reduce payroll if you're having a tough time. Certainly travel and entertainment may have to take a hit. Oftentimes it means removing things. That could mean removing underperforming employees as well. If you know the story of Jack Welch, who ran General Electric for many, many years, and he ran it very well. His philosophy was every year you let go of the bottom 10%. Ouch. But it was very effective for him. Lastly, and this was great for me as a photographer, perhaps you could consider bartering. I didn't pay for an oil change for a couple of years when my normal guy needed to update his website, so he needed a bunch of photography. So we did a barter deal that saved me a whole bunch of money and worked out well for him as well. So bartering can be a great way to manage your expenses. Ultimately, it's about driving bottom line. It's about how you can keep more of what you make. So you do that by increasing your sales, by managing and reducing cost of goods sold when you can, certainly managing expenses. These are the three biggies that you work simultaneously, and you use these techniques some of the techniques that I've just described to drive bottom line, to ultimately keep more of what you make. That's what this whole thing is about. Again, in our unabridged version of this, we go into quite a bit more detail of how to even just design your P&L. That can make all the difference in the world as to how you display the data and then work with that data. All right. I'm going to go through the last bit here. We're going to change gears very quickly. As I said, I am the director of the Central Arizona College Small Business Development Center. And our mission is to help entrepreneurs realize their dream of business ownership. That's the bottom line of what we do. Ultimately, we help businesses in all areas. And the bottom line is to provide economic impact to Pinal County, Arizona, and the United States and beyond. That was funny. Our services include counseling, training, market research. We are a one-on-one counseling kind of gig, but most importantly, we are at no cost to clients. We're not free. Nothing in this world is free. We're all taxpayers, but any of our services are at no cost to our clients. There's some of the things we do in our one-on-one confidential counseling. Trainings, just like you're seeing today. All kinds of different things. So let us know if you'd like us to ever present to your group. And we can also get you some very expensive market research and benchmarks. We go into more detail in the unabridged version of this on benchmarking. As I said, I'm the center director. I'm joined by my colleague, Paul Vukalis, who handles the part of North County. But that is the team. And again, all of our services are at no cost to you. So I'm going to go ahead and just put up my contact information here. And we can address some questions now, Robert.
Excellent. So real quick, everybody, too, that Kevin mentioned the services that his team provides. Every small business development center across the state also provides those services. Every county is covered by a center. And so you can reach out to your local center, or you can go to azsbdc.net for the statewide, which Faith just posted in the chat, the statewide website for the SBDC. I work closely with them. They're a great partner of the ACA's out in the field. So great resource. So we're going to jump into the questions. We got about 10 minutes, so we should be able to get through these. So we'll jump to that first one. Was Kevin, is people manage business by keeping an eye on bank account to make sure you have money. P&L looks at history, which is more important. You look at P&L to make corrections while still looking at money at the bank account.
Okay. I assume, we're talking cash now, really, the money in the bank kind of thing. Cash flow is, we all know cash is king. It's obviously very important that you have the money in the bank to pay yourself, to pay your employees, to pay your suppliers. So you've still got to be looking at the bank account, but the P&L, I guess you can call it historical when you receive a P&L every month. Again, the junkie that I am, I was looking at it every day. I was monitoring the P&L every day, looking at year over year, month over month kinds of things. Cash is king, so you've got to be watching that as much as you possibly can. But the P&L is also going to help you decide to help you to make future decisions better. I guess that's the way I try to answer that.
Yeah, and I've seen where there's businesses where the P&L looks phenomenal, but some of their operational stuff on their own back end is not efficient, and they go bankrupt because they don't have the cash flow. They're not calling and collecting on past due bills from clients. There's operational things that, when it comes to cash flow, that they're not doing that they could do better, and then they just run out of cash. So that is a very good question. You do have to definitely keep an eye on your bank account, make sure you have the cash there. But some people will only look at the bank account. Their bank account has money in it, so they keep going. And the P&L can help you really fine tune that cash flow and maximize your profits.
I would also say that, your accounts receivable, which technically is a sub ledger. We won't go into the details on that, but you want to be writing your accounts receivable. That's how you receive your money. So all of those things are important. That's why it's a maze. It's also juggling. It's a number of different things to run a small business.
All right, go for it. Next question.
What do you base your own salary on? Is there a percentage or a balance per se that looks better on the P&L for getting funding? Well, first and foremost, the IRS demands that you have a reasonable salary. What that number is, that's for you and your accountant and perhaps your legal advice to decide on. I needed to pay my mortgage, I needed to pay my bills, those kinds of things. So I typically based my salary on covering my world that way. Everything else needed to go right back into the business to continue to build. All right. Shall I just proceed this way?
Yeah, just keep going down.
Yep. All right. Let's see. The next question from Anand is: people manage business by keeping an eye on bank account to make sure
We already got that one.
I think that one I've already answered that. That
So
was
William Campos.
Let's see. The third question: we sell advertising placements, which we purchase up front and then resell. Would that be considered cost of goods sold? We sell advertising placements. No, because I'm guessing that's more service. What do you think, Robert?
That would be something you'd want to work with your accountant to identify on how you're setting up your cost of goods sold. It sounds like the advertisement placement is your product. You buy it at one price, just like you'd buy a stuffed animal, and you sell it at another price. So your product is selling those advertisement placements. But it's really going to depend on how you set up your accounts with your accountant.
And if that particular thing is not variable, if it doesn't change, then there's a good chance it's not a cost of goods sold too. But work with your accounting professional on that one. Next question. How do you add direct labor to COGS? Techs in our company are on salary and payroll is run by a contractor. Again, this is probably a question for your accounting professional, but truly any labor that is directly tied to the production of the things that you sell, technically that belongs in COGS. Again, that's a better question for your accounting professional. Robert, do you have anything to add on that?
No, great. Great explanation. One way you could look at it is the technician that's doing the oil change on your car. That is part of the cost of goods sold. It's part of the cost of selling that oil change. So it should go into COGS.
And using that analogy, Robert, you might say then that the manager who's managing all of those mechanics, he's not a variable cost. He's a salaried employee. He belongs out of cost of goods sold then too.
Yeah, he would be under a different payroll line. But one of the keys of that is setting it up correctly on the front side, how you want it to be set up, and then maintaining it. If you go changing it, if you've got it set up one way and we're saying it's a little bit different, you may not want to change it, because the important part of that is year over year, being able to look, okay, what did we do last year in September, and what are we projected to do, or last year in August, and what do we do this year in August, to compare to make sure you're on track with, so you're comparing apples to apples. And that year over year consistency is what really can pay dividends as you study your P&L.
That's an excellent point. And again, another reason why you should work with your tax professional on this. Next question: for service-based companies, does the COGS become cost of services sold, meaning time, tools, etc., needed to deliver the service? the time of labor would be the majority of the cost in this category. If you're a service-based company, there's a good chance you don't have costs. Again, a question for your accounting professional, but if a cost varies depending upon your sales, then you likely do have a cost. I'm sorry I'm not answering this as well as I should, but again, another good reason to talk to a tax professional or an accounting professional. Anything to add to that, Robert?
No, it's, that's why accountants have jobs. That's one of the reasons to help make sure things are set up and being accounted for correctly.
Yeah, some of these questions, these are excellent questions, by the way. Great questions for your professionals.
And another reason why they're important that they're set up correctly, especially with COGS or cost of services sold, is if you misclassify some of that labor that's involved, you might be mispricing your goods and services. And so you're not making the profit on them that you should be, that's industry standard. So it's important that your accountant understand your industry to help you set that stuff up correctly, so you can see if you are, not just line iteming it correctly, but to make sure that your profit margins, your pricing and so forth comes out correctly.
Very good. Commissions, I can't think of a situation where commissions would not be in cost of goods sold. Commissions are always going to vary depending upon how much you sold. If it's a variable cost, my first cut is it's a COGS. I have seen people measure Ebitda and others look at just EBIT. What is the benefit of looking at one versus the other? Well, Ebitda is adding depreciation and amortization. EBIT is leaving depreciation and amortization out. I'm guessing that might be a specific industry issue, especially for those industries that don't have a lot of equipment that require amortization or depreciation schedules. That's my first cut at that one.
With that, when you look at the Ebitda and you factor in that depreciation and amortization, it can give you a false sense of your cash. So going back to that very first question, when you factor in depreciation, we're like, all right, yeah, we're making money. But that line before that, the EBIT, is going to give you that idea of here's how much cash I have. The depreciation amortization is on paper, and only affects your cash when you go to sell those assets.
Yeah.
So, great question on this, because they can affect you. You can't be looking at it and have a misunderstanding where your cash is at.
Very good. What are the sales tax effects of bartering? How do you evaluate them? That answer could go a couple of different ways, and probably both of them my boss doesn't want to hear me say anything about.
I'll comment on that. That is a question that you would want to get with your tax accountant on.
Yeah.
Because
yes,
we all know the government wants their taxes.
Yeah.
And there are rules around bartering in the accounting. So, it can be a beneficial way, but there are some tax requirements with that. I'm just not a tax expert to share with what they are and how to do it correctly. And I would consult everybody to reach out to your tax professional for information on bartering if that's something that you may be doing.
Just make sure that you're charging your retail price for whatever you're bartering. I'll say that. Okay. Wow. For expenses that change from quarter to quarter, advertising, etc., is that shown differently on a P&L than a more consistent expense? Well, first of all, advertising, marketing, again, those are partially fixed costs. They won't change dramatically over the course of 12 months, but they will change a little bit, versus rent, which is fixed. They're all in expenses, they're just looked at differently. I guess that's the best way I can address that.
You know, Kevin, we're at time, so I was scrolling ahead. We're gonna have to wrap up, but there's a couple questions towards the end that tie in. One said accountant was not helpful. They mostly do taxes. There's accountants that are CPAs that do bookkeeping and don't do the taxes. And there's other accountants that focus on taxes. So if you're not happy with your accountant, find a different one. But tying in with that, there's a question on QuickBooks. Who should categorize in QuickBooks? You should work with your accountant or bookkeeper to do that. That's one of those things when you set it up on the front side, it will serve you better on the back side. It's a lot harder to fix it later than start it correct. And if it's not quite right, it's better to jump in and just get it right at some point instead of just pushing it on. So we want to thank everybody for the great questions today. I know we couldn't get quite to all of them, but most of this stuff can be handled by the SBDC in your area. So again, please reach out to them if you have any additional questions. They can be a great resource. They also have some business planning tools that can help you get some of this kind of semi set up and look with forward looks, or use it to help, if you're looking for lending. So great job, Kevin. Any last comments as we wrap up?
No, thank you for the opportunity, Robert. I appreciate it. Just know that any of the SBDCs can help you with all of this stuff.
All right. Excellent. We want to thank everybody for being with us. We hope you have a great week. Normally, I would say I look forward to seeing you next week, but next week we will not have a boot camp. We will the following week. So we're taking Tuesday, the 5th off for the holiday as everybody gets back from a holiday weekend. So we'll see you in 2 weeks. Until then, have a great week and holiday weekend. Thanks.
Thank you.
Bye.